Hello, and welcome to the 2025 season of the Nu Videocast. I'm Leila Suan, and I lead communications here at Nu. This year, I'll be interviewing top company leadership to discuss strategy, product, and culture to showcase how Nu became one of the largest financial services company in the world and to talk about the huge opportunities that still lie ahead. Our guest today is David Vélez, CEO and founder of Nu, and he's here to talk about 2025 priorities and our future vision. Welcome, David.
Thank you, Leila. Thanks for having me.
Absolutely. Before we even get started, can you tell us a little bit about what our goals were for 2024 and how we performed against them?
Sure. So 2024 was a year where we needed to really strengthen our base in our core markets, which is Brazil, Mexico, and Colombia. And so to really strengthen our base in those core markets, we defined four priorities that we shared with our investors at the beginning of the year. The first one was Mexico. We have to build a really strong base in Mexico, since it's our second largest market and the opportunity is gigantic. There is over 120 million population, but only 12% credit card penetration. So it's an amazing opportunity for Nubank. For Mexico specifically, we were very successful with some of the results that we had through the year. We almost double our customer base, getting to 10 million customers in Mexico, so becoming now one of the largest financial institutions in the country. So we're very happy with the progress we did there. Finalized also Mexico with one of the largest deposit base balance sheets in the country. Then for Brazil specifically, there were two real key targets. The first one was grow in secure lending. Secure lending in Brazil, what is called in Brazil consignado, is the largest profit pool in the market, over 450 billion reais in portfolio, and we had zero. We began the year with effectively zero in this very large market. We were able to grow over 650% in this product, ending the year with over $1 billion in portfolio. In one of the categories, which is called FGTS, we now have over 30% market share in all the new originations. And we were able to sign 9 different contracts with different municipalities and state entities around the country. So we're very good about secure lending. The other key part of Brazil was high income. High income is a really important segment for us at Nubank. We have a large participation in the high income of Brazil, but we don't have significant share of wallet. We're used as the secondary or sometimes tertiary credit card or savings account. So it's a large opportunity for growth. We were able to do significant progress in this segment. It was the fastest growing segment we had inside Nubank. It was driven by having one of the highest net promoter scores in the market. We have an 84% NPS there, and we ended up the year with over 700,000 customers in what we call Ultravioleta. So feel very good about the progress. It's a long-term journey because it's a very competitive segment. There's a lot that we still need to do to be competitive in this segment, but feel very good about what we were able to do. And finally, we had a good progress in what we call the money platform, which is basically as we get to close to 60% of the Brazilian adult population with hundreds of millions of customers, we have the opportunity to grow beyond financial services and launch new verticals and products to our customers. So there, we were able to see over 1 million customers buying in marketplace. We launched a travel experience into our app. We launched a cell phone experience in our app, and it's the beginning of getting into a number of different new verticals and segments over the next few years.
Those are fantastic numbers, but I was caught by something you said. These are long-term goals and it's a long-term journey.
That's right.
And so I want to understand how we balance our goals. How do you decide like how much energy to spend in like the short-term results and long-term things that are going to feed us in the future?
I think it's all of these are really, it's a long-term journey, and we kind of have to do both, right? We have to dream and think very big, and have a plan for us to really be meaningful in all of the different segments, but also be tracking our progress in the short term. They are not necessarily mutually inconsistent. You need one to track the other one. And so it's partly strategy and partly good tactical execution.
And we're a public company. Do you feel there's a lot of market pressure for more short-term results? Do you feel the market understands what we're doing?
I think they're both. I mean, there's There are investors that are asking for the next quarter. There are investors that are asking for the next 10 years. We like the investors that are asking about the next 5 to 10 years because we really think that we have an opportunity to build a generational company. It's the early days of Nubank. It's day one, as we call it, it's the first minute. And so we are focused on that long term, on building on reinvesting and building on that long term opportunity. But we understand that it's important to build trust with investors, and you build trust with investors by doing what you say you're going to do. And you do that through delivering in the short term.
So let's touch on that. How did you see our 2024 full year results?
I was very happy with our 2024 results. As I mentioned, on the 4 priorities, we were able to see significant progress. Specifically on financials, we end 2024 with over $11.5 billion in revenue, growing almost 60% year over year. So that was a significant revenue growth. We added 20 million new customers, going from 94 million to 114 million customers, becoming the third or second largest financial institution in Brazil in terms of number of customers, with an 83% activity rate. So that means we're not just adding customers that are not doing anything. This is adding a lot of customers that are engaging significantly with our platform, very large, about 4.2 products per customers, with an increasing average revenue per active customers. So we're seeing a large platform that continues growing with a consumer base that is actively engaging in more products. From an earnings perspective, we almost doubled the earnings that we had, going from $1 billion last year to almost $2 billion of earnings this year. That's a 28% return on equity. So we might be one of the few financial institutions in the world that manages to both grow top line at almost 60%, as well as generate a return on equity of 28% at the same time. You have both growth and profitability at scale, which I think is something very unique for Nubank, and we were able to show that through this year. So from financial perspective, very, very happy with the results also that we were able to show.
David, that's super impressive growth in customers, like doubling in Mexico, over 100 million in Brazil. We've been hearing a lot about how we might reach saturation. Like, because of our sheer size, we shouldn't be able to grow so much more. What's the secret sauce?
Yeah, I mean, I think at some point we'll run out of Brazilians. That's unless Brazilians start having many more babies, we're gonna run out of Brazilians. And so
Well, we have the babies for under 18, right?
exactly. We have the under 18 segment of our product, which by the way was also one of the fastest growing segments last year. But unfortunately, at some point we'll run out of Brazilians. That hasn't happened yet. What we saw through 2024 is still over 1 million Brazilians customers come in through the doors every month. So the rate of new customers is continues to be very active. But really, the opportunity then becomes engaging more, having this base engage more with more products. As we launch more product for high income, as we launch the money platform, as we launch secure lending, we have more products to offer our consumers, and we see that average revenue per active customer increases and number of products per customers increases. While we have one of the largest, if not the largest, fully digital consumer base in Brazil, we still only have something like 3% of revenues in financial services in Latin America. So while it might seem that we're big, we're actually tiny. We're actually still very, very small in terms of our fair share of revenues and participation on the market. And that is now sort of the second phase of that growth is providing more product, engaging more with our customer base so that we can grow that 3% market share in total revenues in financial services to a very much large number over the next 5 to 10 years.
I love that you mentioned that because, we're celebrating, we're the third largest financial institution in Brazil, but the opportunity ahead is so huge, right?
That's right.
You mentioned the unique combination of growth and profitability. For someone who doesn't know too much about Nubank, could you give us a quick zip through on our business model and how that flywheel works?
Sure. So I think we decompose the business in a number of different pieces. First one, we need to continue adding customers. We add customers in Brazil, now Mexico and Colombia, and that customer machine continues to be extremely healthy. What's been amazing about Nubank is we, for 11 years, have been able to build one of the largest fully digital consumer bases with effectively no marketing or significant branding. Our marketing spends or customer acquisition cost continues to be less than $5 per customer. So one of the lowest in the world. Our base was built fully organically through word of mouth, and that's a function of the type of product that we were able to deliver and the type of consumer experience that we gave to our consumers. So, or we have a customer origination machine that happens at a very low cost, and that's a reflection of our different of kind of differentiated position in the market. Those customers then start as they join our platform, they start getting more products. It could be a savings account. They start doing payments through Pix. Could be a credit card. Could be a loan. Now with Money Platform, they might buy a travel ticket. They might buy a TV. They might buy an iPhone. They might get a cell phone account with us with new sales. So there is more products being delivered at zero marginal cost to our customer, and they start engaging with more. That increasing number of products per customer drives an increasing average revenue per customer. Today, on average, we have something like about $10.5 per customer. Traditional banks have $40 per customers. Now, I don't think we're going to get to $40 per customers because there is a lot of fees that banks charge that we won't charge.
Mhm.
So maybe we won't get to 40, but maybe we get to 25, 30 at some point. There's a huge, significant growth opportunity of revenue per customer as we deliver more products and customers get to know us better, and we're able to underwrite them better to get a better customer line. So that drives revenue, and then we are able to scale that portfolio with an incredibly efficient cost structure. Where if you look at for 11 years, our cost to serve a customer hasn't really increased. It's less than $1 per customer. While yes, more products is more complexity, we get significant economies of scale. We have a lot of our own technology. We built our own core banking system. We built our own databases, and that gives us a lot of operation efficiency. So that means being able to serve a customer incredibly efficiently. And so if you see an increasing revenue per customer with a fixed cost to serve, you're going to see a significantly increasing profit per customer. And that's been the model and the flywheel that we continue to execute.
Super clear. Now let's get to finally the 2025 priorities. This year, we've organized ourselves as a 3-act journey. And Act 1 is to become the largest and most loved retail banking franchise in Latin America. Act 2 is to go beyond banking. And Act 3 is to set the foundations for global expansion and the AI private banker. That's a mouthful. Let's start with Act 1. What's the roadmap for that?
Yeah, so Act 1, in a way, is a continuation of what we did in 2024. We're still operating in Brazil, Mexico, and Colombia. Even in Brazil, these early days I was discussing, we still have a lot of market share to gain. Mexico is early days. Colombia is very early days. We feel very good about the traction, but lots to do, more products to launch, more ways to engage the customer. So we're going to be very, very focused on increasing the type of products that we offer in these 3 geographies, consistently challenge ourselves to really innovate in terms of the product construction and what we can able to offer for our customers. And that's the way that we maintain the leadership in terms of quality and Net Promoter Score, which is our leading indicator as a customer. And that's that way we continue strengthening that position of being the leading digital bank in Latin America.
That's great. Let's try to slice that a little bit. So, about Brazil and Latin America, but Brazil more specifically, we're starting to hear people talk about saturation, macroeconomic challenges ahead that we might not be resilient enough. What do you have to say about those critics?
I mean, listen, I think we've heard critics. We've had critics for breakfast, for lunch, for dinner since we started the company. A lot of skepticism. Yeah, we always go back to first principles. Again, I think the model is just superior. It's just a superior model to bank the global mass market retail consumer. It is when through technology you're able to provide a product that is higher quality at a lower cost, you win. That's
a
kind
winning
of the
formula,
basic. That's
right?
a winning formula, and
Yeah.
that's what we're showing these 3 countries. Yes, operating in Latin America is volatile. Macro changes one day from the other one. In 11 years, we've seen 8% GDP contraction in 1 year. We saw the worst recession in Brazil in 100 years. We saw presidential impeachments. We saw scandals. We saw corruption. We saw all type of negative headlines that you can possibly imagine. But we as a company are very resilient to that. And I would like to think about us as almost anti-fragile. Every time the environment changes, we use it as an opportunity to over-execute and to move faster than everybody else. It's Senna, the Formula One driver, that says that it's impossible to pass 10 cars when it's sunny, but it's possible to pass 10 cars when it's rainy. And in Brazil, it's always raining. And in Brazil, Mexico is always raining, or at least we get a little bit of sun and then it rains again. So listen, it's part of the journey. I think it just makes it a better company. I think we're ready to, as the winds change, we change faster than everybody else, and ultimately executing in an environment like this becomes a comparative advantage, and that's I think what we've been able to show for over a decade. So we're if things are sunny, we're happy. If things are rainy, we're happy as well.
There's always opportunity in a
That's right.
crisis. I've heard you say that a few times already.
That's correct.
Great. Let's go back to Act Two. You mentioned some industries that we're diving into. So, new sell, marketplace, travel. Why did we choose those sectors? And do you think that's a distraction from our core?
Yeah, so I think the opportunity that we have since the beginning, really, and if you go back to our beginning and look at what it was the core objective, core purpose that we have as a company that hasn't really changed in 11 years, is we define it as fight complexity to empower people. We arrived to that almost purpose when we understood that financial services, banking in Brazil was extremely complex, in that the incumbents wanted to maintain that complexity because if there was complexity, they could overcharge consumers. They could overcharge, charge higher interest rates. And financial services is complex. You have compound interest. You have a lot of this lingo that people understand. So we define complexity as the enemy. And what has happened over the past 10 years is that we've realized that there's complexity in a bunch of other different sectors, specifically on telecom. When we started, the companies that were least that had the least satisfied consumers in Brazil were banks and telecom companies. Now banks have improved a lot. We like to think partly because of our competition and our entry into the space. But there is a lot of complexity in the telecom space. There is a lot of complexity in the travel space. There is a lot of complexity in our sector. So we think there's an opportunity for us to evolve our core purpose and take it to other different verticals. The fact that we have this large consumer base where we can offer a product at zero marginal cost, there is no CAC to offer another product or service, creates a very large opportunity in terms of that cross sell. Now, I think you're right that we have to be worried about distraction, about doing too much. There is always risk in doing too much, but also risk in doing too little. So it's a continuous conversation around what is the right allocation of resources, allocation of time and energy and focus and capital. And we continue to think about that question. But overall, we think there's an exciting opportunity in kind of going beyond financial services as it's strengthening the value proposition even in financial services.
You mentioned the complexity in financial services, and I want to bring that to Act Three, which is setting the foundation for global expansion. Do you see this complexity in the rest of the world? Is the opportunity going to be similar to what we see in Latin America?
Yes, I think there is complexity really all over the world in financial services. In some countries there's more, in some countries there is less. When you look at a lot of emerging markets, for example, and you see credit penetration being 5%, about 5% of customers have access to credit, or 10% of customers have access to credit. That's the ultimate complexity, because if you are 90% part of that 90% of any given country that doesn't have access to credit, like you are grabbing money from loan sharks. You are engaging in a number of different areas. Your life is much harder. So that's the ultimate complexity. Financial services also tend to be very offline still in most countries. It's amazing to look at when you look at financial services globally. It's the largest profit pool in the world. It's something like $7 trillion in profits, and only about 3% of that profits today belongs to digitally native companies. 97% of the profit pool still belongs to incumbent banks that are doing banking through banking branches. And banking branches, some branches might be good and some managers might be helpful, but a lot of the times you're there stuck for hours trying to solve something when could you be using that hour with your family, playing with your kids. So you look at the fee table of a lot of these banks, as we saw here in Brazil, is 120 different fees. $2 for getting an SMS. In some of the countries we're in, they charge you $1 to access to see your customer account balance in an ATM. They charge you access to internet banking. So it's 120 different fees. That's a huge amount of complexity. You're always, as a customer, trying to navigate all those numbers, trying to navigate what's the right. That's not specific to Mexico or Brazil. That's really in a lot of countries you see
And
that.
low returns on deposits as well, right?
Exactly. I mean, most countries around the world, you see most of the consumers' deposits getting paid zero, right? Zero. Your balance, as a saver, you're seeing your balance go down every single month instead of going up every single month as it should. So all of these opportunities are common denominators of financial services globally. Our belief has been that this is a global trend. This is not a Brazilian trend. Brazil and Latin America was one of the best places in the world to begin executing this model and proving this model. We think that after 11 years, we are proving it. We're showing the growth, we're showing the profitability of the model. And 2025 is going to be the first year where we finally start making this more significant steps towards going beyond Latin America and thinking about a world where Nubank is more of a multi-country, multi-region, multi-continental technology company.
So global expansion still. You did some interviews in Davos. I know all the journalists wanted to know, when are you guys going to other countries? What's the actual timeline for that? And what does it mean for us at Nubank to be focusing just on the foundations for now?
So I think 2025 will be the year will we formally announce certain steps in this direction. Not ready to do that now. We're setting up the basis. But there'll be a bigger, by the end of this year, there'll be a bigger strategy, more public, around how we're going to think about this internationalization.
Great. Is this a 10, 20, 50-year plan? What are we talking about?
Forever, yes.
The infinite game,
It's
right?
the infinite game. Ultimately, there's if we have 3% market share in Latin America, imagine the percentage of market share that we have in the world's financial services. Try to make that calculation.
Okay, David, tell us about the AI private banker. We saw so much hype around AI. I know that you're leading internal discussions that are super interesting about pace of and the change and the progress in this technology. What's possible? What are you dreaming that we can do with that? And what are you seeing in the world?
Sure. So, in a world where banking was done in branches, the cost to serve a customer was extremely high, especially if you were in the lower income population, right? If all you needed was $100 loan, the bank had no interest to give you a $100 loan via banking branch, because the cost structure of the branch was so expensive, the bank would lose money on every single one of those transactions. That meant that in a world of offline banking, you left a lot of people outside the banking system. Only in Latin America, around 250 million people are out of the banking system. Around the world, something like 4 billion people are outside the banking system. Now came the smartphone, and smartphone penetration reached an incredible percentages, something like 80, 85, 90% really around the world. It is the most massively consumer product in history, right? And that created digital banking. And so in digital banking, we don't need offline branches. We can get to the end customer to do that $100 loan at a very, very low cost structure. And that enables somebody like us to give an account to over 40 million people that didn't have access to banking before, over 20 million people that never had access to credit before. And so digital and smartphone enabled this financial access. But that hasn't really solved is financial knowledge, because what happens is you might have access to a bank account or to a credit card, but you still have all of these questions around complexities. Like, I need a loan. Who is the best bank that's going to give me the best loan? How do I make the banks negotiate to give me the best interest rate? I have $1,000 to invest. Where should I invest? What is the best product for me?
Depending on my goals, right?
Depending on my goals.
Yeah.
The richest population has very sophisticated in making those decisions. What's the right tax efficient mutual fund that the lowest income population has no access to that. They don't even know what question to ask, right? And that hasn't been solved by us yet, digital banking. People talk about financial education. It hasn't really worked as well. That is the big, big dream of AI Private Banker. It is giving the experience that the top 1% today has in financial services to the bottom 50%. It is every single person around the world having a private banker that grabs your hand and tells you, Leila, this is the right product you should be investing. This is how you make that. This is how you get that loan. Don't invest in that product. That's a scam. Don't buy that token, right? It's somebody that you can trust, that has full information around you, and that's going to give you perfect information and perfect advice. We'll have infinite patience. We'll have infinite capability in telling you what is the right thing for you. That will be the solution of truly complexity in financial services. And so that is the big idea really on what AI could do for financial services. And we're making baby steps in that direction. We're excited about that vision, but it's something that we certainly think we will be able to execute over the next, who knows, 5+ year plus.
That's exciting. Very bold vision. And I want to
Yes.
talk about bold vision and bold goals and come into a little bit of our culture here. You mentioned, competition is knocking on the door. People, need to have their edge. I've heard you say sometimes here at Nubank that if a goal doesn't make you nervous, doesn't give you butterflies in your stomach, then you're not being ambitious enough. Can you bring us behind the scenes on how Nubank establishes OKRs and goals and how you are personally involved and invested in keeping up with that?
Yeah, sure. I mean, listen, I think it comes from like when we go back to the beginning, what we were trying to do just felt impossible, and everybody we talked to told us it was impossible. But we dared to shoot really high, and it ended up being possible, right?
It happened.
The experts were wrong, completely wrong. I met with 28 CEOs of banks in Brazil. They told me impossible.
How many no's did you hear?
All of them said no, right? The word most used was it's not realistic, right? We and so if you're stuck with that words like it's not realistic or impossible, you're limiting your ambitions so much. And so we've consistently tried to break through the walls. I like a lot. There is apparently a quote from Aristotle that says it's better to shoot very high and miss than shoot very low and hit. And I think that's true. Like it's such a tragedy to shoot low and hit, because then you end up asking what if, right? What if we had shoot higher? What if we should try more and being more ambitious? And so since just kind of the beginning, every time we set up a goal, we just push the teams to try to hit harder, to be ambitious, to let go of that fear of failure. Um, Sometimes we hit it, sometimes we don't, but at least we want to know that we tried as hard as we could, and a lot of the times we hit it, and a lot of the time we surpass it, and we probably surpass it more often than miss it, and so it kind of strengthens that position that we truly, as an organization, we truly are uh, unaware of what we're capable of. Limiting our capability with any given goal is limiting our own potential, and we rather do not put those artificial type of goals ahead. The other big part of that, though, is create the right compensation incentives, because that's, I think, where a lot of companies get into trouble. If you don't hit that goal, you don't get a bonus, right? Or
Yeah.
you hit that goal, then you get a bonus. Then you drive all the energy of the organization into hitting that specific goals. Sometimes 2 months after, that's not the right goal anymore, and you got to change. Sometimes the right thing for the business is actually missing that goal because things change. So what we do is everybody gets long-term compensation based on equity, and equity aligns the long-term of view of anybody. Nobody at Nubank gets a cash bonus at the end of the year, because cash fundamentally is very short-term oriented. And hitting those goals is one input of many into figuring out performance of a team, of an individual. It's not the only input into that decision.
Well, you just touched upon one of our values, which is, acting like an owner, not a renter, right? So that's fantastic. David, we talked a lot about strategy and we're starting to talk a little bit about culture. And something you always say is that culture eats strategy. Can you tell us what that means?
Yeah, so I like to compare it sometimes when one of the things that I learned when I was at Sequoia was that the culture of a business was started by the first 10 employees in the first 6 months. And we had that lesson very clear in our mind, and to like take advantage of those first 6 months, we codified our culture in a culture deck. And that was almost like our Bible, kind of the principles of what we were here to have. Once you have clarity on those values, then almost every other decision becomes easier. The type of people that you recruit is easier. Either you're consistent with these values or you're not. The type of people that you let go, it's also easier, because either you're consistent with some of these values or you're not. The type of products that you do, what we eventually realized was consumers were coming to us for that culture, not for the products, because culture brings people, people build products, and products attract customers. So customers ultimately are consumers of culture. And we realized one of the interesting things was even into metrics, very different metrics like external net promoter score and internal net promoter score of employees, they moved in tandem. When we were doing great things for our customers, our employees were feeling great, they were building great products, and we're making good things for customers. So ultimately, I think it's almost culture is like the spirit of that of the company. It provides clarity in terms of the people that you hire. It provides clarity in how you make decisions on product. It brings your customers, and ultimately, it just permeates everything that you do on the company. And why the reason why it's important the strategy is that strategy might change. Your strategy, the world changes, your strategy might need to change. But your culture doesn't need to change. Your culture scales pretty significantly, and it gives you the sort of let's call it the robustness to be able to sustain what you are in the face of significant changes of strategy or tactics as you execute.
Abs- So before we wrap, Davi, I want to ask you just a couple of, fire rounds here. Anything keeping you up at night? What do you worry about?
I think it's maintaining that sense of urgency. I think it's maintaining that hunger. I think it's maintaining that willingness to challenge the status quo. It's easier to challenge status quo when you are 10 people in a house. It's harder when you, in a way, are one of the largest financial institutions in the region, and there is a lot that you can lose. There is downside, but you have to continue thinking about the upside. So it's maintaining that essence of being a startup, while realizing that we have to have significant guardrails in a lot of decisions that we do.
Got it. And to end on a high note, what is the single thing that makes you most excited about 2025?
I think we'll be the first taking this first step into internationalization. I think what's exciting is kind of the first step into the rest of the history of the company, something that we've always looked forward to. For years, we've been sort of the kid sitting in the chair, like wanting to do it and self-imposing discipline because it's been extremely important for us to maintain focus. But we're getting very close to that point where we think we can execute on the core and maintaining all the momentum that we have on our core, and we can start buying options into the next wave of growth for us. So I'm excited to see that happening.
That's fantastic. Davi, thank you so much for your time. I want to thank our listeners for staying with us till the end, and we'll see you in the next episode.
Thank you, Leila. Thank you, everyone.